Okay, good evening, everyone. Thank you for coming to class today. Today, we're going to be covering day 4 of the 2-week syllabus. We're going to be going over trend identification and market structure. Did everyone get a chance to go over their homework last night?
Yes.
You guys can unmute yourselves. I want to interact with you guys. I want you to be able to talk to me.
Yes, we did. Yes, I did.
Yes. Okay, great. All right, so with the trend identification videos, we had 2 videos, units 1 and units 2. Did anybody have anything from those 2 videos that you just did not understand? If you did, unmute yourself now.
I was a little bit confused when they were talking about the outermost boundary. I'm still not sure what that meant.
Okay, the outermost boundary. I'm gonna make a note of that.
And I'm sorry I didn't write down what time it was.
It's okay. We'll find it. All right, how about anybody else? And is that Connie?
Yes.
Okay. Anybody else have anything that just tripped you up that you just did not understand about the trend identification videos? Okay. All right, well, let's just dive in. All right, so trend identification videos, unit 1. Let's see here. I want to go to this section here specifically. Right here. Can you guys see my screen?
Yes.
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 Can hear the audio, Andre.
Hello.
All right, and then we're going to draw our trend line for this uptrend.
Good.
All right, so let's connect these here. Okay, so to understand why trend lines form, we need to understand a little bit about market psychology, supply and demand, and market participants. Right now, we can conclude that the market is bullish. So when we conclude that the market is bullish, what that means is that key market participants, people with enough equity to move the market and actually impact price, are long on this pair. Now, if you open up the market and you're looking to get in on this market and capitalize on the bullish move, here's my question to you. Do you buy right here when price is high? Price is high, overpriced, expensive, etc. So up here, this is not the place to buy. You don't want to buy when price is overinflated, overextended, and expensive. Nobody goes to Walmart and buys the TV once it's been marked up. Everyone goes to Walmart and buys the TV once it's on sale. Now, there are a lot of deep economic concepts and principles that drive this human behavior, and you see widespread applications of this across all economic sectors. You even see it in holidays, and you see it played out with events like Black Friday. Now, I don't know if you've ever been to a Black Friday event or a Black Friday sale, but people are willing to kill other people. They're willing to slap babies for 20% off a microwave. Absolutely irrational behavior, all just for a quote unquote fair or discounted price. Nobody wants to pay full price. Now, this is not necessarily some kind of wise, deep understanding. Most people can rationalize that the general
Can you guys hear me?
Yes.
Yes.
Okay. All right. So this right here is a example of a bullish trend line. Everyone, let's go ahead and start taking some notes, okay? Everything we discuss right now is going to be about a bullish trend line. So, you know how we learned about support and resistance? And support is at the bottom, resistance is at the top, and that's where the price keeps rejecting. A trend line is the same thing except for it's on a diagonal line. So it's going to be the trend line for when price is moving up and when price is moving down. And right now we're discussing when it moves up, which is when it's in a bullish trend. Okay, so whenever it's in a bullish trend, in this example right here that he has on the screen, price started here. Let's act like this is like market open. I'm just saying that to make
the public would want to buy something.
it easier for some of you guys' thought process. So let's just say like the market open here. So when the market opened, this is where price was at, right? And as price went up, it was going higher. So it made a higher high. Remember those pivots that I taught you how to put on your MT4? I mean, on your trading view? This is an example of that. So as price went up, it went higher. It made a higher high. Remember that price moves in waves. So when it goes up, it has to come back down, right? We learned that yesterday too. So when price comes back down and touches this trend line, well, actually the trend line wouldn't be here. We would just be looking at price and then we would draw the trend line. So when price comes back down, it's making a higher low. So write that in your notes. For bullish trend, you will know it's in a bullish trend because it's going to be making higher highs and higher lows. Everything about bullish is high. The highs is high, the lows are high. So higher highs and higher lows. Okay. So it's going up. Price is going up. It made a higher low. It goes up. It makes an even higher high because you see price is here. Price is here. The second wave, it went higher. So it made a higher high. So now when it comes back down, remember the higher low was here. Price over here on the price side is going up, right? You see this? 78, 79, 80. So this higher low is now a higher low here. Does that make sense to everybody?
I have a question. So, to my understanding, when you say higher low, you're looking at that point where the line is hitting the
Looking at
horizontal
the point right here, the point
line.
where price
And
came
because
down.
it's going up, that would be called the lower high
The higher low.
or higher low.
Yes. When it's going up, it's going to be a higher high and a higher low.
Right, and
Because
so the next peak,
right,
the
go
next
ahead.
peak would be a higher also.
Yes, this right here would be a higher high because see, this was the higher high, right? But it's above that price now. So that's a higher high.
Right. Okay.
Every
Trying to
time price
understand why we're
peaked,
calling.
every time price peaked, it was higher than the last time. This is the first peak. Here's the second peak. It's higher than the last one, so it's a higher high.
Okay,
This one is higher than the second one. It's a higher high.
okay.
This one is higher than that one. It's a higher high.
And
When
then the
price
reverse on the
came
bottom.
down, when price came down to retest, okay, when price came down to retest or retrace, it made a higher low than it was here.
Right.
And so that price is here at about, it's not quite at 80 here. You see this? And as it made the higher high, it had to come back down. So it's going to make a higher low than the one it did previous. You see now
Okay,
price is at
understand.
like 81.
Yep. I understand. Thank you.
So whenever you're drawing a bullish trend line, price is always going to be above it. The reason why price is going to always be above it, because the purpose of the trend line is to determine what trend it's in. So we want to know when it break. The only way it can break is down. If it continue to go up, it just stay bullish. So the only way it can break the trend is to go down. So we need the trend line on the bottom, because once it breaks this now and retest and then continues, now it's considered bearish. Does that make sense to everyone? Why the trend line in a bullish trend, when the trend is going up, price is steady going up, the trend line is on the bottom?
Yeah. Oh,
Because we want to know when price is going to go lower than what it's been in the past. So we got to put price on the bottom so we can see it when it break. And remember, when it break, we're not taking the trade unless we get the retest. Does that make sense to everybody?
Okay, explain exactly what the retic is. Is that the rebound?
The retest is, okay, so you see how price started here at the bottom and it went all the way up here? It cannot make it up there by just going straight up. It's got to gain some momentum, so it goes up, it comes down, gains some momentum so it can go higher. You see, every time it comes down, it goes higher.
Right.
It can't go higher unless it retests. That's why yesterday when we were talking about support and resistance, remember I said we try to catch the move at the bottom, right?
Right.
So if we was catching the move at the bottom, let's just say we're going in for a sale here because we knew that this was bullish market. It didn't break structure, and we're gonna start buying here, right? If we go in,
I'm sorry, Andrea. It's so much noise. Can everybody mute their lines?
I'm sorry. Hold on.
yeah. Is my line muted?
Let me see if I can mute everybody. Hold on.
Okay. No, it was a zone. Like my mic was off.
Oh, sure?
Yeah.
Oh, okay. And she said she heard a whole bunch of noise.
Michelle, Isaiah.
No.
Oh, okay.
Who's that?
Sorry.
Isaiah, you gotta mute that line, bro. Isaiah, you gotta mute it.
I'm trying to mute everybody.
Sorry.
Okay. Can you guys hear me? Can you guys hear me?
Yes.
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 Okay. All right. Sorry about that, you guys. So what were we saying? As price comes down here, it has to gain momentum in order to go up. The young lady asked a question. What, can you repeat your question again?
Well, I misunderstood what you said. So
About the retest.
Yeah.
So does that make sense to you what the retest is? As
So
price
the
goes up, it's going to come back?
The retest means it's just coming down and hitting the trend line and then to go back up.
Right. So this is a bullish trend, right? Price is going up. So the retest, price is always going up as it's going higher. The retest means that price is going to go down lower than where it's currently at. It has to come down to some type of support and gain momentum to go back up.
I got it. Thank you.
Make sense? Okay. Does that make sense to everybody?
It does
Yeah.
now.
Yes.
Okay, so that's why this trend line is on the bottom, because look, if this trend line was on the top, we want to know when structure breaks to go down, so we'll know that we are in a bearish market, right? So if we had this trend line on the top, it would never hit, it would just go down and we wouldn't know. Does that right there help with knowing why it's on the bottom?
Yeah.
Yes,
We
ma'am.
need it on the bottom because we need to know when it break it. Okay. Anybody have any questions on a bullish trend and
I
where to
got one
draw the
question.
trend line?
So I'm looking at the bottom. I see like September, November, December. So we're looking at the trend line over a couple of months, or it could be a shorter
Well, it
period than that.
depends on what time frame you are. It sounds like you're on a monthly. Are you on a monthly?
I'm not sure. I'm just looking down here on the
Oh, on here.
your
Oh,
slide.
okay.
Yeah.
On here. Yeah. I can't even see the
At a
bottom of it.
discount
Hold
rather
on.
than paying full price.
Hold on.
But when we start talking,
He has
Yes,
his on the
September.
daily.
He's on the daily.
On the daily.
He's on the daily right here. If you look up at the top of the chart, you see this 1D.
Mm-hmm.
He's on the daily.
Okay.
Okay, so this is like a month's worth. Each one of these is 1 day. Okay, and you can determine what trend is in on the higher time frames, the daily, even like the 4 hour, and the 1 hour. You can determine what the trend is. Okay. All right, so let's go.
Andrea, is there a rule of thumb on what time frame we should use to do the analysis? Is it always 4 hours, then go to 1 hour, then go to 15 minutes?
Yes, you can draw your trend line on really any of the higher time frames, but most people draw them like on the 4 hour and the 1 hour. On the higher time frames. It's just more confirmation on the higher time frames. So you find or determine the trend of the market on the higher time frame, and you have your chart marked up, and you wait to see where it will hit your zone. We haven't really talked about zones yet, but just imagine like support and resistance, right? Remember we said that we would buy at support and we would sell at resistance. So you wait for it to hit your zone, and then that's where you would take your trade.
Okay. I got one more question.
Uh-huh.
I think like in the past I've been like emotional trader because
Uh-huh.
like looking at that trend line, I see how it's from the very, very beginning, it started way down there. And
Yeah.
so in my look like you're saying to just buy the higher low if
Yeah.
the trend line is bullish.
Yes, you know that as long as it hasn't broken this trend line, you can place buys. You
Okay.
just need to know when to place them. But we know we're in a buyer's market.
Okay.
So that's what this whole trend identification is to teach you to determine which way the market is going, so you know whether to place a buy or sell. Because if this market right here that we looking at is bullish, right? We know for a fact that it's bullish. If I get in here and place a sell, if I catch it when it's right here in the retracement, I'll make a little bit of money because we're going down. But guess what? It's a bullish market, so it's going to go up. And as it go up, I'm in the negative. Does that make sense?
Not so you're going to be in a negative if you
Yeah, your account would be going negative because you placed a sale and prices going
oh,
up.
a sale.
Yeah.
Okay. Yeah,
But
yeah.
so what I'm saying to you is determining the trend of this market tells you not to place a sale during this time because price is above this trend line. You will not place a sale until price comes below it and retest it.
Oh, gotcha. Gotcha.
It's got to break it. It's bullish.
Gotcha.
Remember,
Okay.
when it break it, you can't, don't take the trade until you get the retest, because remember, it's always gonna retest it. So when you start to see it to break, let's say you jump in then and you jump in on the sale, it might come way down here before it retests. So now you in heavy negative drawdown. Your account just red, bleeding red, just negative. Make sense? So no retest, no trade. When it break the trend line, it's got to retest that trend line, and then it pay attention to the next candle, and we'll learn about that later. And then that's when you place the trade. Does that make sense to everybody?
Yes.
Yes, ma'am, it does.
Yes.
Okay, so everybody know that we draw when the market is bullish, we draw on the trend line on the bottom at the peaks. You need at least 2. You got to have at least 2. This example here is showing 3. This is a peak, this is a peak, this is a peak. Let's say that this peak right here didn't come all the way down to here and it just came like to here and came back up. We could still draw this trend line because we got this one right here. That'll be 2 peaks. Okay. All right. So let's move on.
Talking about institutional investors, the people that actually have the equity to control market price and move and impact the market. These people
Okay, here.
and rises, bounces from the bottom. Those are the up. So we will, and then in the bearish market, we are heading down. All right. Now, for trend lines in a bullish market, you need your trend lines to be at the bottom of price. You're going to be connecting the valleys in the market, the lows of the market, the points where market finds support and rises, bounces from the bottom. Those are the connections you want to look for in a rising market. Your trend line will be beneath the price, and we'll explain why in just a moment. Now, in a bearish market, your trend line goes above price.
Okay, let's talk about this, okay? We're going to talk about a bearish market. Everybody start taking notes. Bearish trend. This is a bearish market, and we're going to discuss how to draw a bearish trend line. Okay, so it's the complete opposite of what we just learned. Okay, so in a bearish market, price is going to be coming down. So remember how we talked about market structure would break and this market would become bearish once it broke this trend line, retested, and then continued to come down, right? So let's just visualize that. Let's just act like this trend line is extended up to this line right here, right? So price comes down, breaks the trend line, retest it, okay? Now, we at the retest of the trend line, which is here. because it broke and retested, let's say this is the retest, price is going to continue to come down. As price comes down, the market is, well, it's already bearish once it broke and retest. Okay, the trend line has to be drawn on the top. So wherever price peaks at, that's where the trend line is going to go. Because in a bearish market, it's the opposite. You making lower lows and lower highs. Everything about the bullish market was high. Everything about the bearish market is low. So now that we broke and retest, we going down. Now we going lower than we was over here. So it's considered a lower low. Even though we going up, it's not as high as we were over here. So it's considered a lower high. Not a higher high, a lower high. Okay. Price got to come up and do the retracement so that it can keep going down. Price can't go, it can't reach these levels down here without gaining some momentum going back up. Because remember, it moves in waves. So once it come up and hit this trend line right here, it goes down, makes another lower low. Got to go up, get some momentum so we can drop lower. So it's going to make a lower high.
Wait.
So it can come down and make
All
a
right.
lower low.
So here,
Yes, did someone say something? Can you guys hear me?
Yes.
Yeah, we can hear you.
Do this make sense to everybody?
Yes.
Yep.
Yes.
Yes.
Okay. So
I'm sorry, Andrea.
you okay?
I was gonna say, because I am taking notes again with you, because I don't know, they're just clearer when you break it down.
Mm-hmm.
The bullish trend line, price is moving up.
Yes.
And it's going to make higher highs and higher lows, right?
Yes.
And so the line is going to be, the price will be above the line.
Yes.
And then with the bearish trend line, price is moving down.
Yes.
Price will be below the line and will
Yes.
make lower highs and lower lows.
Yes.
Okay.
That is exactly right. And that's in the bearish market.
In the bearish, okay.
And let me explain to you why this trend line is on top. Because now that we came down, broke structure, retested the trend line, came down, right? And now we continue in the down movement. We need to know, okay,
in a
so
bearish
now,
market,
ooh,
you're
now
looking.
we know that we placing sales. We in seller's territory now, right? Because we bearish. So that's remember, that's the whole purpose of the whole trend line identification. So you know what to be placing. Because if you jump in this market right here, placing a buy, you're gonna lose. Because we in a bearish market, price is going down. It's going up to retrace a little bit. You might see blue. Blue means you're winning, you're in a positive. You might see it for a little bit, but guess what? Soon as the price get ready to go back down, you're red. You're gonna be bleeding negative. Okay. So the reason why the trend line is above on the bearish market is because we want to know as long as price is going down. So how we'll know that the market has turned around and went bullish, price would have to come up here, break this trend line, retest it, and go up. That's why it's on the top. If we put this trend line on the bottom, it'll just keep going. If as long as it's bearish, it'll never break it. And if the market decides to turn around and go up, we don't have no indication of it because our line will never get broke. Does that make sense?
Yes.
Is anyone confused? Do everybody understand this? Because this right here, knowing this is going to change your trading forever. It'll save you so much money because you know when to place a buy versus placing a sell.
Is it possible for it to break the trend line and yet continue to go down?
That's possible. It
Okay.
has price can break it. It can come up, and then when it get ready to do the retest, it could come straight back through it.
Okay, that's what I wondered.
Yeah, so you want to wait. So if price went up, let's say price broke it, and when we say break it, we'll learn this later on too. We mean like, remember how we looked at the trading view and we were watching the candles print, and it depends on what time frame you on, how many minutes you have on the side before that candle was finished. You guys remember that?
Yes.
So
Yes.
when we say it break it, we mean that the candle got to completely close, meaning that it's done with and it's moved over and started printing another candle. And you can see that the timer, switched over. Let's say you're on the 15 minutes and it started counting down from the 15 again, meaning that that candle, went across it and it closed above the trend line. Let's say it got ready to print a new candle and it closed, but it was below the trend line. It's not considered broke yet. It got to close above it. Because remember, it's going to take for everything to be above it for the market to go bullish. Same thing over here with this bullish market. You would need that candle to close underneath here. Just because let's say you're on a 15-minute time frame, right? And just because you see that candle, it got 3 more minutes left on it, and it's halfway. It's like half of it is above this line, the line going through the middle of the body, and a little bit of it is hanging down at the bottom, and you jump in the trade. Guess what? Next candle could print bullish and price go on up because it didn't close below this bullish trend line. I mean, this bullish trend line. That makes sense.
Yes, it makes sense. I did have a question. So last night I looked at the trade that Tradera sent, the alert, and I still was having a hard time identifying like well, for one, I couldn't figure out how to put it back on a line chart because you did say it's easier to see with the line chart, right?
Well, yeah, when you're doing the support and resistance, some people use the line chart just to be a little bit more accurate.
Okay. Yeah, I'm just gonna keep practicing. I'm looking over here on one monitor at it now, trying to see if I can see what you're seeing here with the actual live market.
What pair is it?
Euro USD. I just pulled up the demo account that we did together, and so this is already on Euro USD. But I'm thinking I probably need to squinch it up, do the line chart, and then maybe I could see the peaks easier.
Yes. Okay. So what we'll do is we'll look at some live. Okay.
Okay.
We're gonna do that as soon as we finish this little topic here. Okay. I'm making a note of it now. Okay, so as of right now, everyone on this call understands the trend line identification. We're gonna look at it live in a few minutes. Did anyone not understand anything about it?
Nope.
Yes. Can I ask a quick question?
Yes, ma'am.
Even though I'm not fully, understanding everything, but the trend line that you have on the bearish market, if you took that line and put it at the bottom here, couldn't that be a bullish market?
On which side?
On where it says bearish market.
No, because This is a bearish market. If we put the line on the bottom, right? So the price is coming down. Price is coming down. It made a lower low. It's because look, price was here. This right here is almost at 8,700, right? Well, 87.00. So it came down to here. This is almost at 84. It's lower. So it made a lower low. So now it can't keep going lower. It got to pop back up so it can come back down. So when it popped back up, it makes a lower high. The reason why this is a lower high is because remember, as price went up, it was making the higher highs. And until it reaches those levels, see, this is higher than that. It's considered low. So all the highs and all the lows that's made in a bearish market are all lower. All the highs made, all the lows made are higher lows. I'm sorry, lower lows and lower highs. Okay, you can't put this trend line on the bottom because this is the low point. We want to know when price, because right now we selling. This is the low point, right? But we would be selling up here. But if this is where the lower lows are made, if we put that trend line coming down here, we would never know when the market went bullish and went up because it would never cross our trend line.
I see.
It would just go straight up. But with it being here in a bearish market, when it does go up, we know, hey, once it starts creeping up here, we need to watch it because more than likely it's going to cross over and it would retest and then go up. And remember yesterday, I'm not sure if you were on the call yesterday, but remember yesterday when we were talking about support and resistance, remember we said that the more times that nail and the hammer hit the ceiling, it was getting weaker. The same thing applies with these trend lines.
Yeah. No, I wasn't on yesterday. Remember, I said this is my first time.
Okay, we'll get that information to you. But
Yeah,
for everyone else that was on here yesterday, the same thing applies with these trend lines. If it's then hit the trend line, you know, it's rejecting. That's what they call rejection. It's rejecting off this trend line, meaning that price don't want to go no higher. It's just going here, and that's it. And so when you see things like this, you draw this trend line, right? And you got the trend line drawn. So when you come look at this chart later on and you see that price is creeping up here, you know to start getting ready to see if it's going to break, do the retest so you can get in the trade for the buy. Same thing here. Soon as it break and do the retest, you get in for the sale, you catch it at the top. This will be at the top of the move. And price will start going down. Price start going down, it's gonna come back up so it can keep going down. This is the sale that we was in, we would be in. If we waited for the break in the retest, we entered the trade right here. This is our trade. We winning.
For the peaks.
This right here is what we call a pullback when the price comes back up to this line. Remember I said if you don't catch the trade at the top of the move, you want to wait for the pullback. Why you want to wait for the pullback? Because we in for a sale, right? We in for a sale over here. If we in for a sale, we want to sell when price is higher. We don't want to sell when it's down here. We want to sell it when it's up here off this trend line. Over here with the bullish market, we want to buy when it's low. So we want to buy it when it's down here off this trend line. It's a buyer's market.
Quick question.
Uh-huh.
Yes, ma'am. No, that definitely makes sense. So from the bullish market, once it breaks the trend line and go back up to retest, at the retest, when it goes back up, is that when we get it on the sale? Is that the move?
Yes, and what you would do, you're gonna learn how to you're gonna learn how to read the candles. So the candles that print out, they each mean something depending on how long it is, you know, what it looked like. And all that's inside of the candlestick Bible.
Okay.
So the candles, they print a story. And so when you see the break and the retest, you pay attention to the candles and you'll know to get into the trade.
Okay.
I don't want to go into the candle thing now while we still doing, but it'll come.
Okay.
Matter of fact, everybody make sure you locate the candlestick Bible, and if you can, I truly recommend that you get it printed out. It don't even cost that much money. You don't need to get it in color. You can get it in black and white. You can even contact your local like Staples and call them, and they'll give you an email address where you can forward it over to them. Tell them you just want the basic on the little binder ring. You know, tell them just put like the clear sheet on the top. It's not that much, and they'll have it ready for you, and you can go pick it up.
Okay. Thank you.
Okay.
Andrea, I have a question.
Yes,
So
ma'am.
on the bearish market, when you're coming down and it breaks this trend line, it resets and then it starts to go back up. Right there's where you want to buy.
Yes, ma'am.
Okay, got it.
Yes, ma'am. Because it broke, retested, and you get the candle indicating that it's going to go up. We know we in a buyer's market now, and we want to catch the move from the get-go. We don't want that move to get way up here and then it's going up. Let's get in. Guess what? It got to retrace, remember? So now that you got in right here, right? We in for a buy. Guess what? Price got to come back down. So now you in drawdown. So you want to get this right here, help you determine like when to be able to, it helps you determine what the market, you know, what type of market it is, if it's a buyer's market or a seller's market. So you'll know what type of trade to be pushed to take.
Perfect.
And it
Thank
also
you.
help you know when the market has changed. So if you in a book, let's say you in a buy and the market, it changed, you know, price came down, broke a retest, you need to know to get out that trade. That's how you would know. Let's say you was in a buy and you bought right here. You know, you bought, you placed a buy, you know, you win
in the market,
because price
the
is
top.
continuously going up. This was at a high, it got higher, it got higher, it got higher, it got higher. So you're winning. You made all of this is money. That makes sense? So when it come down and it break and it retest and it's going down, if you know this, you'll know, hey, market, it's bearish now. I need to get out. Because if you don't get out, you're about to lose everything you won, and hopefully you can get out before and just eating up your profits and not your account.
Makes sense.
Okay.
And the retest is based on the trend line.
Got any other questions? If anybody got any questions about any of this, ask me now, because I think it'll be easier for you to understand it, you know, if you ask the question now with us going over it.
Is the retest is based on the trend line, correct?
Yes. Price moves in waves. Imagine a wave in the ocean. A wave, you know, don't just come up and just never come back down. The waves, they come up, they go down, they come up, they go down. That's what happens in this market. When it's in a bullish market, the waves go like this. When it's in a bearish market, the waves go down. Simple as that. Remember, the price can't go from one point to way up here without coming down to get some momentum to bounce back up. That's what the retracement is. So whenever, it doesn't matter which one you're in. If you're in a bullish market and you're in a buy, yes, you go into, it's gonna start going the opposite way. This with every trade you in, it's gonna go the opposite way for, they call it the pullback, you know, so that it can get the momentum to continue to go the way that it's going.
You've explained that very well. It makes a lot more sense to me now. Thank you.
Okay. Or anybody else? Is there anybody on it? Everybody should know trend identification. If you don't, please say something so that we can make sure that you understand it. It might be somebody else on the call, you know, not getting the same thing that you're not. So no question is a dumb question. You know, just let me know. Do everybody understand this?
Yes, explain it very well. Thank you.
Yes, you're doing a great job. Yeah, I got it.
Thank you. All right, so let's see. All right, so now we know how to draw the trend lines on the bullish and the bearish market. When price is going up, the trend line is on the bottom. Price going down, trend line is on the top. We know that it's going to remain in that type of market until price has broken, retested, and continued to go the opposite way. Right? So that's what he was showing an example of here. This is a bearish market, right? So here, you see these points here? That's your trend line. So if price continued to go down here and broke here, it's going to go down. If price broke that trend line, remember I was trying to explain to you why it would go on the top. Here's the example that I was talking about right here. Price would go up, break it, come down, retest it. This is where you would place your buy, and then you will ride it all the way up. Now remember, it moves in waves, right? So this is just the first wave. Then you'll ride a retracement, and then you'll ride price up again. And when you learn how to mark your charts up, you'll learn how to come up with these spots that you're going to call take profits. It's going to be like take profit 1. This will be take profit 1. You know, you'll have your pullback, and then it will ride up to the next level. That will be take profit 2. You'll learn how to determine where those spots are in the market. Okay. All right, so let's see. All right, so here, this right here is an example of him drawing a trend line. We know that this is coming down. Price is coming down, right? You see these peaks? So you got to draw the trend line, and remember, you can only draw the trend line if you got at least 2 touches, right? So we got 2 touches. So we draw the trend line, and we drawing it from the top because price is going down. We want to know when price start going up, so we know that we're no longer selling. If you were to get in here, as long as price stayed below this line right here, you know to stay in the sale. You have no reason to get out. None. Now, it was a young lady earlier that asked about the outermost trend line. Now, what that actually is do you guys see here at this third peak? Now, let's just imagine that from here to here hadn't happened. Actually here. So let's just visualize like this is the cutoff that we have, right? So I see we got 2 touches, so I go ahead and draw the trend line. Draw the trend line, you know, price go ahead. I'm in the trade. I got in the trade up here. I'm in the trade. I know to stay in it because guess what? It's steady going down. It's not coming up here even touching my trend line. It comes up here. It wicks it, but it didn't break it. So we still in the sale, right? We still in the sale. Now we got, this is considered a touch, that's considered a touch, but the trend line that we had actually drew out, you see how this candle pushed through. And we were talking about momentum. It needed this big candle in order to push through here. And then once it pushed through here, this candle actually closed, and this candle is considered the retest. This red candle right here. And this candle is considered a doji candle, which means that price is about to reverse. It means reversal. So now that I see that I got the break and the retest and it's a doji candle, guess what? We taking the damn trade.
Yes, I see it. Thank you.
Y'all see it?
Yes.
Do you see it?
Yes.
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 Yeah.
Okay. So it was a young lady earlier that asked about, she didn't get the outermost boundary. Now, let me tell you what the outermost boundary is. The outermost boundary is this trend line was drawn, and then these candles came up, but you see how this one red candle, the wick went through it? It went through it, but it didn't cross over it to break it, so we're not worried about it, right? But we gotta consider that. So we need to change this trend line. So this is where some people would draw another trend line, and they would draw it from here. This would be touch one, and they will make sure that it includes this candle here, the wick of it. That's the outermost boundary. Does that make sense to everybody?
Yes.
The young lady that asked that question, do you understand now?
Yes, I understand what that means. I'm just not sure I understand the significance of it yet.
The significance of it is that price came all the way up here. It didn't sustain and stay, but it shot all the way up here, and we need to know that. That's important to know. So that's why we would then change this trend line. Now let's just watch this section real quick, okay?
Can somebody mute their line? There's a lot of
Somebody,
noise.
hold on, let me do it. Thank you. Okay,
Thanks.
let's go.
And there will be minor exceptions to this rule, and we'll look at more examples in other videos when that happens. But in general, this is how you properly draw your trend line. When you draw your trend lines in this manner, you know for sure that when price breaks this, it's broken the outermost boundary, the outermost support or resistance level, and you can for sure rely on the fact that you are looking at a potential trend change. So now, notice how when we connect these peaks, what happens when price gets back up? We fall again. And then price comes back up right here, we fall again. And then remember how when we discussed support and resistance horizontally, we discussed how we'd like to see that it takes strong momentum to break through the level. It lets us know that that level is indeed strong and something that we can rely on from a fundamental standpoint. Here we have a strong candle breach right here, and then look what happens. Real simple, price strong breach, retest, held as support now, and then off we go. All right? Real simple. So very similar to horizontal support and resistance. It's just that we're now turned diagonal. So here is our reaction point right here. We can get rid of this arrow. All right. So let's be comprehensive here and mark these. The slower these videos are, the better, because it just ensures that there's no questions left. Breach, and retest. All right. Now another word for peak, we keep using the word peak so that everyone understands that these are the highs of the market that are creating this trend line here in this downtrend. But another word for all of these is what? Resistance. This is the market's diagonal resistance.
Okay. Everybody unmute themselves.
Hey, did you say unmute ourselves or what?
Yes, because I want to make sure. We at 8 o'clock right now. I don't want to keep everybody on long, but I wanted to make sure that everybody understood trend identification, and then we can go over market structure. I feel very confident that I can explain it to you. It's going to make sense and not that long. And then I would like for everyone to go over and watch Derek Conway mark up the charts, because it's going to sum up everything that we've been doing for the last couple of days, kind of. Does anybody have any questions about trend identification?
No. I do have a question.
No, ma'am.
Do you pull a trend line at the wick or at the body of the candlestick?
If you're not talking, can you mute your mic? Thank you.
You want to draw your trend lines at the wick. I personally, now some people do body, but I draw from the wick. Here they're teaching you to draw from the wick, because that's where price actually went up to. It didn't stay there, but it went there. So I feel like it's just more accuracy with doing wick to wick, drawing across the wick, opposed to the body, because you're doing a body, that's where price the same, but it actually went higher than that. So if you're going based off that, your trend line is going to be off. It'll be lower than what it should actually be. So you would think that price actually broke structure before it really did. Does that make sense?
Yes, ma'am. It sure does. Thank you.
Yes.
And I got one question. So the trend line, you can't draw your trend line unless you have the data after the close of the market, right? So we don't want to.
No, when we were talking about the close of the candle, we were talking about when it actually breaks the trend line and retest it and get ready to go up. You don't want to try to enter into a trade. Let's say you in a bearish market and price is going down. You don't want to enter in for a sale when price starts to break the trend line before it retests, because just because it broke it, if you don't get no retest, no trade. It could have broke that trend line and price could come back down. Price could go up significantly and then turn around and come back down, because it has to come back and retest the trend line.
Okay, and if the market is still open, are we still getting the trend lines? I'm probably asking this question kind of wrong.
Okay, so as long if you're trading, the market's open. So you would be going to your charts. Let's just do this. Let's just go to a chart. Can you guys see what do you see on my screen?
We can see the chart.
See the chart.
Okay.
The chart.
All right. Let's do EU. Who could tell me what EU is?
Euro?
Euro
Euro
what?
USD.
Euro
Yes,
US dollar.
Euro USD.
Okay.
Okay, so we want to see more. So we're gonna hit the negative button, which brings everything closer. I feel like when I'm doing this stuff, if I just tell you what I'm doing, you guys can be learning a little bit about, how to use this tool, the trading view also, okay? So, I want to see more, so I squinched it up. If you're on your computer, if you use your mouse, you got the scroll. If you scroll, you see how it just takes it, it zooms it out. Okay, and then I'll need to see this, so I'm going to move it up. You can actually grab it and move it. Okay, so let's go to the daily. We got to get it together, so we got to scrunch it up. Okay, now we need to try to determine what market structure is. Now, one thing I know we did not go over in that video was we went over 2 ways that the market moves. The market moves in 3 ways, you guys. It moves in a bearish trend, a bullish trend, and consolidation. And I'm going to show you what consolidation is. Consolidation is where price isn't really doing anything. It's just dancing in an area. No volatility. You cannot make any money here. Do you guys see this? Let me blow it up so you can see it.
Yeah, we can see
Make it big. Okay, so you see how the market is, this is volatility right here. But even here, it's consolidating because it's still sideways. But when you see the high spikes in the market, that's when the market is moving. You see how this is coming down? It's working its way down. This right here is considered consolidation. When you jump into a trade and you in consolidation, you get what they call whipsaw. So let me explain what whipsaw is. You see that the width of this box is only from price right here, which is 1.161, right? The highest price goes to is 1.201. So that means that you can't make any more money than this is on the daily, so this is really not a good idea, a good example by me showing this, but on a smaller time frame, because this is a lot of pips for a daily, because remember, each one of these candles is a daily candle. But on a smaller time frame, this would be a smaller area, and your money would just be going positive, negative, positive, negative, positive, negative, positive, negative, positive, negative. You won't get out until the price breaks outside of this box, either to the downside or to the upside. And it depends on what you're in, if you're going to be profitable or not. If you're in a buy and you get caught in this whipsaw and price decides to come back down here and then bust out of this box, you're going to lose the trade. So whenever you see sideways movement in the market, it's called consolidation. Everybody write that down. It's a sideways market. It's where market price is just going up and down, up and down, up and down. And if you get stuck in that, you'll get whipsawed. That's what they call it, whipsawed. It's like, when someone's in a car accident and they do the big jar and they call it whiplash. This what they call whipsaw. You just gonna be going back and forth, back and forth. You'll see your account blue, then it'll be red, blue, red, and until it decides to break out. Okay? Does that make sense to everybody?
Yeah. Yep. Yes.
Perfect. Okay, so we want to determine what type of market we're in, right? So y'all unmute yourself. If you don't have any noise in your background, and mute yourself. I want you guys to interact. So we on the daily. Let's go to Let's just go to the 4 hour.
4 hours.
Ooh, I like that right there. Where it just broke into consolidation at the top of
Yep.
that last run. We're
Yep.
sitting there right now.
Yep.
So it broke under and now it's retesting. So we need to see what's going on, guys, you know? So I would look deeper into that to see, hold on, sorry. I would be looking deeper into that, knowing that it's at those levels where.
Yeah, because this right here is the support level.
Right.
It was.
It
And
looks like
this
it's
right
still
here at
testing,
the
right?
time would have been the resistance level. You see how it was bouncing up there? It was going up there, it's hitting it. This the resistance. It came down, look, broke through. What did it do, y'all? Somebody tell me what it's doing.
Retested.
Retesting.
It's retesting. You guys see it?
So that's the move. You're supposed to get in right there.
Well, we haven't fully marked this chart up, but for right now, for this on the 4 hour, yes, this would be a move because now it's on the 4 hour. Now remember, we're on a higher time frame.
Okay.
Right? We're on a higher time frame. Swing traders take the trades on the higher time frame. So, but did you guys see how I came up with them lines from what we learned yesterday? Did y'all see that?
You did it real quick.
Can you put you see where it dipped down? Can you put a line through that and let's see what it looks like on the left-hand side as that move was coming
What you
into
mean over here?
Yes, so like at the bottom of this move, can you put a line through that bottom?
At the bottom of it here?
Yep. And now swing to the left before this whole run started. And let's see what that touches over there. Bang.
Yeah, you see right here, look,
Look at it,
this
guys.
was, you see that? Look how it came up here. It rejected it. It came through. It didn't go all the way through, but here it came through and it went up. It went constantly up.
Now, can you go back to the front? So guys, knowing that price has to come back and retest, and if you put a line through that and you go back to the very beginning, you understand that this is about to be support. You would buy right there,
right?
And it will come back up and test the levels that it broke through, and you get out. Easy class. And that's what Andrea is trying to show you guys. You'll pick up on it though.
Did that make sense to everybody?
You might have to draw circles through that little bottom tip and then the left side where it was resistance, and then they'll be able to see it maybe. So that area, and then all the way to the left, guys, you can see that it was major resistance, okay, right there. And so if you know that information, you guys are learning secrets. So if you know that information,
it was
you're in the trade.
resistance here. It was resistance, broke through, came up, came back down to it.
You buy that all day.
It's going up. That was a buy right there.
Yep. Does that make sense?
Actually, yeah.
Yes.
It does?
Yes.
Okay. So does everybody see why this right here is called consolidation? Because you can't make, the only money you can make is from here to here. You're just going back and forth. Okay, so everybody understood that. Now, so if everybody got trend identification, let's just look at market structure. I'm just going to show it to you without watching the videos. The videos were pretty in-depth if you watched them. First off, do anybody have any questions on the market structure? Let's address that first before we get started. Market structure. Anybody got any questions?
No.
No.
So pretty much everybody kind of understand market structure. Okay, so let me just show you really quick. Gonna throw the pivot high and lows on. I'm gonna take these markings off. Well, actually, nope, I'm gonna leave them on there. Okay, so what I did was I just put on here the indicator for the highs and lows to show us where the highs and lows are, right? So that we can determine when structure is broken. So let's see. Does everybody agree that here we're in an uptrend? Does everybody agree with that? Or
Yeah.
see that? See that we're in an uptrend right there.
Yes.
Okay,
Yes.
so I'm going to hide the pivots for a moment. Here was kind of consolidation, right? Now I'm only drawing it to here because that's where that wick went to. Okay, so you see when price broke out of here, it broke out, it retested, and it's going up. So we're in an uptrend. So what I'm going to do, let me draw a trend line. Now, normally when you would draw a trend line, you would draw it from the bottom of the move, but I'm just want to show y'all this. Hold on. All right, so all right, so this started in the bottom here, but then it went into consolidation. So we're gonna actually start from here. And remember, we only need like 2 touches. Well, we got a bunch of touches here, right? Let me show you. You're gonna see what we just learned. You see how we was in an uptrend all this time, right? But then we went into consolidation. We went into consolidation and then we broke this trend line here. Now, it haven't came all the way back up and retested. And that's probably what it's about to do. It had to come down some. It came down to this support level and then it went back up. It only went here. It could come down and it could go back up. Okay. If you see the candle that is printing right now, we got 41 more minutes. And at the moment, it's a green candle. You guys see that? So price could very well be headed back up to go up and test this trend line. If it go back up and test this trend line, and then, because this was the break, haven't retested yet. If it go back up here and retest this, as long as it don't break it, I will give you for a sale. Do that make sense?
Yes.
Yes.
Okay, so pivots. Need to know when market structure has been broken so you can get out of the trade. Well, this trend identification shows you when it changed, right? But let's look at how knowing the highs and lows can tell you when it changed. Okay, let's look at that. So I'm gonna cut the pivots off for a minute. So when the market is going bullish, when it's going up, what is it making? What's it?
Higher highs.
Higher highs and what?
Higher lows.
Higher highs and higher lows as it's going up. So as it's continuing to go up, as long as it's making higher highs and higher lows, we know that we are in a bullish market, right? So steady going up, steady going up, steady going up. Now, remember with the pivots, when price is over it, it's a high. When price is under it, it's a low, right? So even though price was going up here, we're in an uptrend. It's making a higher high, coming down, right? What is it making? What's this? And what else is it making? No, lower. It's making lower lows starting here. So this, right, it's going to be, as it's coming down, it's going to be making lower lows and lower highs. So this right here was a higher high because this price is higher than this price. So at this point right here, market structure had not been broken yet. Does that make sense to y'all? Because it needed to get below here. It needed to get below this price right here. This was a higher high. This was a higher high. We need price to get below that in order for it to be change market structure. And what happened right here? Hold on. What happened right here?
I need a computer.
What happened right here, you guys?
Lower lows.
Came down and made a lower low. Right? It made the lower low. But when it came down to make the lower low, it didn't just keep going, right? It had to, in order for it to drop, it had to go back up. And where did it go to?
A higher high.
High.
It went to there and it retested it and it's coming down and it's breaking that area. Now we are in a bearish market and we are taking sales. Does that make sense to everybody?
Why would you be taking
your line is breaking up. Say that again.
I said, can you explain why sales at the lower market?
Okay, so when price came down here, we wouldn't take the sale right here. This just let us know that it made the lower low, right? So it made the lower low and it come back up. If we had this chart marked up, we know that, okay, so here is where we had made a higher high before it made that lower low. So we know that price could come all the way back up to here and test these levels. Hold on. It will be here. Price could come all the way back up to here and test these levels before going back down. Okay, so if we had this marked up, when price came down to the low, we wouldn't enter the trade then. Remember, we want to sell when price is at its highest. So when price came up over here and came back and rejected off of this level and printed out this doji candle, guess what? We in the trade.
Okay.
Did that make sense?
I think it's making a little bit of sense. I'm just a little bit confused as to like the concept.
Have you watched the market structure videos in the back office?
I just got in today. This is my first.
Okay, you need to watch the market. When you seeing this right here first, when you watch the market structure video in the back, which is, what day did we watch last night, guys? Day 4.
Yes.
It's gonna make more sense to you.
Okay, thank you.
No problem.
So Andrea,
Yes.
real quick, I'm sorry. Now, when it dropped like that, are we in panic mode to sell, or do we just wait until it levels again and it goes back to support, or go back to the support
Yeah,
level?
when it start, okay, so the only way you would be in panic mode when it started to drop like this, if you was in this buy from over here, because your profits would start going down.
Dropping.
So
Exactly.
so what I'm showing you right now is, let me explain to you how important this is. We know that when you in these markets, you have those pullbacks that we talked about, right?
Right.
Pullbacks go like this, price to go like this. Then they got to pull back, and then it'll go back up, and then they got to pull back, and then they got to go back up, right? So prices do that. So let's say you got in for this buy. You could be in for the buy, and then you could think that this is a pullback. So you don't get out because you think that price is going to go back up. But if you know market structure, you would know that the market changed and it's no longer a bullish market.
Right.
And you would know to get out that trade. Knowing that right there alone will save you a lot of money.
Okay, gotcha.
That makes sense?
Yeah, absolutely.
Does everybody see how using the pivots high and low can actually help you with determining the market structure? Whenever the vanilla colored box is underpriced, is a low. It's a higher high when it's on over top of it. Okay. Everybody understand what consolidation is?
Yes.
Do we trade in consolidation?
No.
No.
Because you'll get what?
Won't get out of it.
You'll get whipsawed.
Yeah.
Whipsawed. Or you'll just be going back and forth, back and forth, back and forth. You'll just be like stuck in the trade, stuck in the box until it break out. You can get out whenever. Don't think you can't get out. You can get out whenever you want to, but hopefully you could get out when you're in the positive. Just try not to get stuck when you see price moving. It's not moving. It's just teetering within a certain area. That's consolidation. Okay. So I feel like everybody understands what market structure and trend identification is. Does anybody have any questions about it? Let's take this off. Let's show an example of a trend line. I want y'all to practice drawing some trend lines, so I'm gonna show you how to get them, okay? So you see this tool right here? That's this slanted line with the 2 dots on the side. That's where your trend line is. If you hover over it, it say trend line tools. So you select it. When you select it, you get to make an option. You get to pick what color you want your trend line to be. Okay. You get to also select the width of the line, how wide you want it. If you wanted dotted lines or what have you, however you want it, you can select it there. Okay, so we're going to draw a trend line somebody tell me, let's do something about this here. So what type of trend line will we be drawing? What's going on with this market? Somebody unmute themselves and tell me.
It's a bearish
It's
market.
a bearish market.
It's a bearish market. So where would the trend line go?
On the top.
It would go on the
Bottom?
top. You said it would go on the top?
Correct.
Somebody said on the bottom. Why would it go on the top?
Because it's a bearish market.
Because, right, bearish market is going down.
Right.
It's
Price
going
is gonna
down,
be
and we
below
want to
the
know.
line.
We want to, right, price got to be below the line, and we want to know when it break and go up. So let's watch this in real. Let's watch it. Look, watch this. So draw this trend line. You want to start at the top of the move. So if it's a bearish move, a bearish market, you're gonna start at the top, and you're gonna bring it down. Now look, remember you need at least 2 touches, right? So we touching the first one. We touching the first wick right here. And we only need to touch 2. So we just draw where we touch 2, right? So let's say right here, let's back this up. Where's my replay at? Okay. Y'all watch this. Now, we drew this trend line, right? So we backed it up. What I just did was I erased everything that happened before now. We backed up all the way to, this is March 20th, okay? All right, we went back to March 20th. Y'all see I had drew this trend line. Now let's watch this and watch this play out. Now, I got in at the top of this move on a sale, right? Let's say I was in the sale. You see how price came down here? It went up, it came down, it retested, but it came back down. These little small candles, you see it took this big candle to bust back down. But now that I got this trend line, so I would keep adjusting the trend line. Remember, we was talking about the outermost trend line? So now that we seen that up in here, this section had then crossed it, I would need to adjust it, right? So when I adjust it and catch the outermost boundary, guess what? We selling until it crossed this trend line. Does that make sense? We just gonna keep extending it. We're just gonna keep extending it. We in the sale.
Just trying to make your money back.
Huh?
I see you just trying to make your money back.
Make your money back?
Well, once it's when you're selling when it's going down and you're readjusting the line.
Right.
Well, what she's doing is she's showing you that if you were in a sell, right, way at the
how
top,
you need to adjust it.
Right, you're still safe. Now that is breaking that trend line that you drew, then you know the market has definitely broke that bearish structure, and you need to exit your trade because it's time to go the other way, baby.
Yes.
Gotcha. Okay.
So when it broke through here, I wouldn't have been even waiting to see if it was gonna come up, come back, come through. I would have exited out the trade, especially if I rolled it all the way down. I would have, as soon as it got up here, I would have exited out. But actually, you know, just knowing how to read these candles, I would have been out of this trade before then. But you will learn that later. But once it broke it, now we know that we in bearish territory. Now, remember how I said when it break the trend line, you don't want to get in for the buy right there? Because guess what? Let's say we got in for the buy. This tool right here that I'm about to show y'all, if you open it up, it's this one right here on the side. It looked like, It got like 3 circles on the side with some vertical lines and an arrow in the middle with arrows pointing up and down. That's where your long and short position is. Now, we already covered this. Somebody tell me what the long position is. What is that considered, or what? A buy. We discussed that yesterday. Remember, we said we want to buy for a long time. We want to go on shopping sprees and just buy for long periods of time, remember? So you want to use your long tool when you're setting up a buy, right? So let's say I would have came over here when it broke. We would have got into the buy. I'm teaching, well, the back office is teaching you not to get in here until you get the retest. Now, in this situation right here, it just happened to play out where it came up a significant amount of pips. But you always want to wait for the break and the retest of the trend line to get back in, because you want to catch the whole move, because this is going to, remember, it's in a bearish market, right? And it want to go up. So guess what? It's going to need momentum to go up, which means that it's going to need to come all the way back down in order to shoot up. Does that make sense?
Yes.
Yes.
So that's why you're waiting on the retest.
When it retest.
Okay, so does everybody know how to determine that the market structure has changed when it breaks your trend line? And how to draw a trend line for a bearish and a bullish market? Now,
Yes.
do y'all see what happened? Now, remember, I said if you don't get the retest, don't take the trade, right? Let's say I entered this trade right here. Let me just stop to pause this real quick. Let's say I entered this trade right here. We didn't get the retest, right? So I got in the trade. It just happened to go up. Then it consolidated. It went down. It went back up again. But guess what? I'm losing from there because I'm in the buy. And now I'm getting whipsawed. You see what I'm saying?
Yep.
So that's why even when it crossed here, we wouldn't have took it, because we need for price to come all the way back down. Do you know why it hasn't went up? Who can tell me why price hasn't shot up yet? Because it don't have the momentum.
People pulling money out?
It don't have the momentum to go up.
Okay.
It need to come down and bounce off of something in order to shoot up. Look at this market and these it's like a trampoline. You know, in order for the price to shoot up, it's gonna have to come down and bounce off of something. It's gonna have to come down and reject off something. Okay, now as you see, we broke this trend line, right? Well, price keep coming to here. So what does that make this? Somebody tell me that. What is this level right here going to be called?
You're not supported.
Yep, that's exactly what it is. That's support. Okay. And here's your resistance right here.
Yep.
Right?
Yeah.
So we know that, okay, price came up here. We crossed over our trend line, so we go into bearish territory, right? So we hit it one time. Bam, it came down and hit support. We hit support again. We went up. We hit support again. You can't, let's see, I don't want to confuse you.
It's bullish.
It is bullish, but right now it's consolidating.
Right.
It's consolidating, right? So it's gonna have to gain some momentum to get up here. Now, because we know that it keeps coming down to this level, this is 1, 2, 3. Who knows? It could end up busting through here, because remember we talked about the hammer and nail yesterday.
Right.
We only got one touch up here, so This is stronger than this, right?
Right.
That makes sense to everybody.
Yes.
Yeah.
So that's why you don't want to try to even trade in the middle of this mess going on right here. You
Just
see what I'm
ride it out.
saying? Because you don't know what's about to happen. Makes sense.
Yep.
It is.
Yeah.
So we know just from this right here, like we just waiting. We waiting to see what it's gonna do.
No retest, no trade.
Exactly. So let's see. I think that pretty much covers everything. As long as everyone knows how to determine when market structure is broken, using the high and low on the pivots, I'm very confident that everyone understands everything from day 4 of the 2-week syllabus.
Yes.
Okay. So let me show you this. This came all the way down to the bottom of this support, right?
Yep.
This right here is just a small trend line, you know, that you could draw if you was just trying to see like what it was gonna do. So that way you know like when price started to cross over this smaller trend line here, that it could be headed back down here. And we already got what? It bust through, it came back down, 1 touch, 2, 3, 4. That could be the move that's gonna turn it back into a sale. Right? But what you would do, but listen though, what you would do is you will wait until, I will wait until it came down and actually broke this structure right here, right? Come down and then wait for what? What we're gonna wait on?
Retest.
Retest.
Yeah.
Wait on the retest, enter the trade right here and ride it down. Uh-oh. Everybody understand that?
Yes.
Yes.
Yep.
Oh, I just messed that completely up. Let's just redo that one, okay?
Nice design though.
Right. But everyone, you see what I'm saying?
Yep.
So we'll wait till it come through here, break this level, come down, right? And then do the retest. That's where I will enter and then ride it down. And then you'll have, it's gonna keep, it'll retest again and go down to a second level. Okay. All right, so let's see. So for tomorrow, if everyone got their syllabus, we're going to dive deeper into market structure. I don't have my syllabus in front of me, but I think we're going to be doing units or videos 4, 5, 6, and 7. Everybody got that?
4, 5, 6, and 7.
Uh-huh. Is someone looking at it? I need to
Yeah, I just got mine
That's
up.
correct.
That's correct. Yep.
4, 5, 6, and 7.
Yep.
So if you could watch those videos tonight, and then we'll meet up here tomorrow, same time, same link, same password, and we'll discuss those videos and make sure that everyone understands them to their entirety.
Andre, I got a real quick question. It might seem a little odd, but I'm looking at the structure and and how everything is playing out in the reads. Is there any way to split trade before it either goes up or down? Is there any way you could split it?
What do you mean split
In
it?
the middle, well, in the midst of you starting a trade, if it either goes down or up, is there a way to stop the trade and
You would
then
just, you mean like completely get out of it? Or,
not completely get out of it, but maybe start? Maybe I'm no, okay. That's
so
impossible.
okay, so is this what you're trying to say? If you take the trade and let's say you're going in for a buy and it's really a sale, you want to know how would you fix that?
Exactly. Right.
Okay,
That's
so
it.
let's say that it was a bullish market. Okay, let's say it was a bullish market and you placed a buy, right?
Yes.
We know in a bullish market, we should only be taking sales.
Sales, right.
So at whatever point you determine that you're in the wrong, you're placing a sale, I'm sorry, a buy in a seller's market and you decide to get out, you would exit that trade at that moment. Now, would you exit the trade and just jump in the trade for the opposite? No, because you want to catch the entire move, remember?
Right. And wait till the
But you
retest.
would get out to keep yourself from blowing your account, because as long as you stay in there, it's going to continue to go negative.
Right. Okay.
Now, remember that the market moves in waves, so you're going to have those retracements anyway. So when you get to trading, don't think just because it's going negative, you need to jump out, because it could very well be the retracement. That's why it's very important that you know what type of market you're in, if it's bullish or bearish.
Okay.
Okay.
All right.
Because you'll jump out, you'll be like, oh man, I'm losing money. You'll jump
And then
out.
it'll
As
spark
soon as you
back
jump
up.
out, it's gonna go, it's done with the retracement. Now it's about to take off.
Yeah.
So that's why knowing everything about what we went over tonight is so important. It'll keep you from having to do that.
Right.
Okay.
Absolutely.
All right.
Thank you.
So
Thank you.
those few little videos, let's see, it's only 1, 2, 3, 4 videos. Looks like it's probably about an hour, maybe an hour and a half. Maybe an hour and a half. If you guys watch 1 or 2 of them tonight, I'm sure you can get the other ones watched sometime tomorrow. Okay.
Are there any replays to any of the, like yesterday, if you missed it?
Yes. So the first day when I recorded, it didn't record everything. It didn't like upload when I tried to do it. So inside of the Operation Promised Land group, you will see a post where it's 2 videos explaining to you how to set up your MT4 and get your broker account. That's it's in a post in the Operation Promised Land. And then day 2 was some definitions. We had everybody read over that, and then we just went over it for day 3. We went over day 2 definitions, and we went over support and resistance. That video is uploaded inside of Operation Promised Land in the file section.
Okay, thank you.
This today is considered day 4. You will be able to find that in the file section. It takes a minute for it to upload, and then I got to upload it to YouTube. So it'll be a couple of hours. It took me a while to get it up there last night because I didn't know how to do it. I had to figure it out, but hey, I got it done. I fell asleep while I was uploading, but I got up in the middle of the night, about 3 o'clock it was done, and I put it in there. So all you got to do is click on the link and you can watch the video from yesterday. So anyone that's just joining us today, if you make it to Operation Promised Land, you will not be able to get into that group unless you have your IBO number and your sponsor's name. It's 3 questions that you have to ask. You get that information from logging into your back office. Okay, you're going to get the IBO number by clicking on your account information and writing down the IBO number from your personal page, your personal information. You'll get your sponsor by clicking on IBO and then my sponsor. It'll tell you who it is. Use that information to get in there, and you'll see the videos in a post that was just posted like 2 days ago with the links to show you how to set up your account. Then go to the file section. You will see days 2 and 3 video. And tonight we'll be uploading day 4. Okay. Does anyone have any questions?
Yes. Where do you get the 2-week syllabus?
The 2-week syllabus is also inside of Operation Promised Land in the file section.
Promised Land in the what section?
In the files, FILES, in the file section.
File.
Yes.
I'll see what I can do.
Okay, so what I'll start doing tomorrow is I'll just come with the 2-week syllabus and start dropping it in the chat if we're gonna have new people coming every day. That way they can just snatch it from the chat, and everyone on the call, you know, I know people talking in the chat, so if you guys could help out by randomly just putting it in there, so you know, people coming in at different times, they'll be able to see it. I'd appreciate that.
Thank you very much.
Okay, no problem. Anything else? Okay. All right. Well, you guys make sure you do your homework tonight, and we will meet here tomorrow to make sure we get some more clarification on market structure.
Thank you.
No problem. Good night.
Good
Good
night.
night, Andrea. Thank you so much.
No
Thank
problem. Thank
you.
you guys for coming.
Bye-bye.
Good night.